Now, even though as a long-term dividend investor, I like to focus on high-quality dividend growth style ETFs that are going to pay me dividends, grow my portfolio, and pay me more and more in dividends in the long term. Even though I like to use those sorts of assets in the majority of my strategy, I also think that there is a place for some ultra-high yielding ETFs inside of a long-term portfolio that are going to get your total yearly dividend income up substantially with a lot less invested. Now, not every ultra-high yielding ETF is created equal because there is some big-time junk out there. But in this video specifically, I'm going to go over 5 of my favorite ultra high yielding ETFs as of this moment that as of right now, looking back since inception, every single one of them have offered a positive total return. Now, some of these are going to be safer than others, so do your own due diligence and be careful, especially when it comes to ultra high yielding ETFs. But if you want to see which 5 I'm going to be buying over the next year and adding a ton of income to my portfolio consistently, well, then make sure to stick around, drop a like down below, and let's get right into the first one. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. So the first ultra high yielding ETF that I'm planning on buying more over the next year and that I actually bought even a few shares of as of today is FEPI, or the Rex Fang and Innovation Equity Premium Income ETF. This ETF has been trading now for over a year, offers a positive total return, and at least as of right now offers a 25+% distribution rate. Now, some of you guys might not be aware of what FEPI is or how it works. So the objective for FEPI, it basically buys into big tech names, writes cover calls on those names, and then you guessed it, with that offers enhanced income potential. Now, because big tech names are so high beta, there's a lot of option premiums to be earned, which is how FEPI offers so much as far as distributions go on a monthly basis to investors. Now, we're talking for every single share of FEPI that you own, you're going to be receiving anywhere from $1.08 per share per month upwards to around $1.20 more or less per share per month, depending on whatever month we're talking about. And just because FEPI has paid this much in the past doesn't necessarily mean it's going to do so for sure in the future, but at least so far this ETF has basically traded sideways and paid massive amounts of income to investors like myself so far. Now, I promised you that at least as I film in this video, all the ultra high yielders that I'm going to be sharing with you guys have all offered a positive green total return, at least as of so far. FEPI, for example, with dividends reinvested, is offered around 28% total return, or around 22% per year on average. Now, FEPI, along with a lot of other names, if we see a big market dip, is probably going to feel some massive pain because, of course, it has lots of exposure to big tech names. But at least so far, FEPI has held up quite nicely, offered a positive total return, which is basically keeping up with the rest of the market, more or less, and is offered a boatload of income, which I'm definitely partaking in. The next ultra high yielder that at least so far as I film in this video has offered a massive total return and a massive distribution rate of over 28% is ZVOL, or ZVOL, the Volatility Premium Plus ETF. Now, this ETF has a pretty risky strategy if you ask me, but at least so far historically it's done very well, and my personal opinion, I could be wrong of course, but I think it's going to do very well over the next year. Now, what I mean by this is that ZVOL basically shorts the volatility index, and by doing so, it earns a ton of premium for investors. Now, shorting the volatility index is perfectly fine when volatility is low, which a lot of times it is. But if, of course, the market turns and if things get ugly and volatility spikes up like crazy, well, ZVOL is going to be feeling some pain. Now, for example, if you happen to think that volatility is going to be rampant throughout the next year, which I personally don't, but of course I could be wrong, then ZVOL is probably not going to be something you're interested in. But there is big money when it comes to shorting the volatility index because, as you can see right here, for every single share of ZVOL that investors have owned over the last year, which keep in mind, this ETF is very cheap. I think it's somewhere around $20 per share or so. We're talking 48.5 cents per share per month distributed, which is a boatload of income. Again, around 20%, 30% yield, which is insane. Now, this will probably honestly shock you the most, at least since inception, 1.71 years. Of course, this could change in the future. But ZVOL has offered, yes, 66+% total return with dividends being reinvested, or around 35% on average per year. So not only is shorting the volatility index maybe worthwhile, but it's very profitable. At least it has been over the last 1.71 years. Now again, if volatility becomes crazy, then this ETF's total return is going to shrink by quite a bit. But at least as of so far, it's done pretty well, which is why ZVOL as of right now is inside my portfolio. It's a very small position, but it's a lot of fun to hold on to. Another one of my favorite ultra high yielders that I've been buying here and there over the last few months is AIPI, or the Rex AI Equity Premium Income ETF, which is also by Rex Shares, offers almost a 35% distribution rate, massive income potential with this one. And this one's very similar to FEPI, but instead of owning big tech, this one owns AI stocks. Now, once again, because these names are very high beta, there's tons of option premium to be earned, which is how it gets that enhanced income potential. Now, as far as on a monthly basis, anywhere from $1.40, $1.50 per share, more or less, is what we're seeing, which is a boatload of income considering this ETF costs around $50 per share. Now, theoretically speaking, again, things can change, but as long as AI stocks traded sideways or up, this ETF could pay you back your initial investment into it in just a few years. And even though AIPI offers a massive yield, it's definitely not a yield trap, at least not as of yet. 0.58 years so far, it's offered 18.19% total return, or around 31% if we annualize this out. Now, once again, if AI stocks absolutely tank, AIPI is going to be in some trouble, but I mean, you can say that about any stock, any industry, etc. Another one of the ultra high yielders I have my eyes on and is also inside my portfolio as of right now and has been now for several months, I've been buying a few more shares of this one here and there, is SPYT, or the Defiance S&P 500 Income Target ETF. This ETF has a 20% distribution rate. And it says right here in the overview, SPYT is an actively managed ETF dedicated to generating current income. They say our strategy revolves around holding shares of an ETF that tracks the S&P 500 performance and engaging in the selling of daily credit call spreads on the index. Now, this is why this ETF is able to generate so much income. It says specifically, income generation, SPYT's investment approach is meticulously designed to generate income through option premiums derived from selling index call spreads, the primary driver of the fund's yield. We sell at the money or near the money call spreads to retain upside growth potential and aim for a target annual income level of 20%. Now, SPYT has more or less traded sideways since it started trading. It is down a little bit from the start price to the end price, but I wouldn't really consider this any sort of massive decay, at least not as of yet. Over the 0.83 years that this ETF has been trading, we're talking a total return of around 14% or annualized out around 16.7%. Now, some investors are already a little bit worried about SPYT. I am as well. I'm watching it closely. In dollar cost averaging when it dips just to lower my cost basis, never going to be a major massive position in my personal portfolio, but definitely an easy ETF to buy into to earn a lot more income a lot quicker compared to other traditional ETFs and dividend stocks across the market. Now, last but not least, one of your guys' probably favorites and one of the newer positions I've been looking into as of recent, QDTE, the Innovation 100 Zero DTE Covered Call Strategy ETF, which offers a 38.9% distribution rate. Now, you guys are probably familiar with this one, but for those of you guys that aren't, QDTE utilizes a synthetic covered call strategy that seeks to provide current income on a weekly basis. Yes, this ETF pays out on a weekly basis, while also providing exposure to the price return of the Innovation 100 index. Now, it then says the Round Innovation 100 Zero DTE Covered Call Strategy ETF, or QDTE, is the first ETF to utilize 0 days to expiry or 0 DTE options on the Innovation Index. Now, it says this ETF seeks to provide overnight exposure to the Innovation 100 index and generate income each morning by selling out of the money 0 DTE calls in the index. Now, this ETF hasn't been trading for all that long yet, but so far so good. This ETF has offered massive income on a weekly basis, which to be honest is sort of all over the place. Anywhere from around 30 cents on a weekly basis to 86 cents, down as low as 16 cents. But looking at QDTE's performance on the max time frame, 0.83 years that it's been trading, the ETF has offered almost 18% total return or over 21% annualized. So because of this strategy and how this ETF has performed, at least as of so far as ultra high yielders go, something that yields north of 15, 20, 25%, QDTE is definitely on my list in 2025 to add to my portfolio to add a ton of income consistently. So there we have it, guys. Those are 5 of my current favorite ultra high yielders that I either own as of right now or plan on adding to my portfolio in 2025. Now, I really have to give some credit to some of these ultra high yielders because if it wasn't for them, there's absolutely no way that I would be able to earn over $7,400, $7,500 on average per month as a 32-year-old dividend investor. Now, like I said earlier, do your own research. Some of these ultra high yielders, along with anything in the market, can be very risky. But lastly, before I go, I want to hear from you guys down below. As far as an ultra high yield ETF, what's your number one favorite across the market as it sits? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.